creating hardship for their suppliers who in turn lay off their workers. Companies in these difficult times tend to make across-the-board cuts. They deeply reduce their new product development budgets and marketing budgets, both of which undercut their short-term recovery and long-term future. Consumers, workers, producers, bankers, investors, and other economic actors feel that they are living through an economic hurricane, a maelstrom that is unstoppable and relentless. Hopefully, this turbulence is only short-lived. In the past, it has been. It has not been the normal state of an economy. Yes, economies often do return to normal conditions, but in this new era, turbulence at varying levels becomes an essential condition. A particular country may be racked by turbulence, as Iceland experienced in 2008 as its banks moved into bankruptcy. A particular industry, advertising for example, may be racked by turbulence as companies move more of their money from 30-second TV commercials into newer media such as websites, emails, blogs, and podcasts. Some markets may be turbulent, such as the housing market or the auto market. Finally, individual companies, such as General Motors, Ford, and Chrysler, may be buffeted by turbulence while others, Toyota or Honda, for example, may experience less of a plight. The fact that an individual company can be living through conditions of turbulence, and if it lasts long enough, a recession, is underscored in Andy Grove's well-known book, Only the Paranoid Survive. Currency Doubleday, 1999. As the former CEO of Intel Corporation, Grove had to deal with all kinds of threats to Intel's preeminent position in the computer chip manufacturing business. It would take just one agile competitor to come out with a superior chip at a lower price to topple Intel. Grove had to live with uncertainty. Intel had to erect an early warning system that would reveal signs of imminent trouble. It had to create different what-if scenarios. And it had to pre-plan different responses to the different scenarios in case they occurred. Grove had to create a system that would insure against risk and respond to uncertainty. We have a name for such a system. We call it chaotics. All companies must live with risk, which is measurable, and uncertainty, which is unmeasurable. They must build an early warning system, a scenario construction system, and a quick response system to manage and market during recessions and other turbulent conditions. But our finding is that most companies operate without a chaotics system. Their defenses are scattered and insufficient. Motorola doesn't have a chaotic system. General Motors doesn't have one, nor do countless others in the United States, Europe, Asia, and in markets all around the world. Most companies operate on the assumption of a built-in self-restoring equilibrium. Economists built price theory with equilibrium in mind. If oversupply occurs, producers will cut their prices. Sales will increase, thus absorbing the oversupply. Conversely, if a shortage occurs, producers will raise their prices to a level that will balance demand and supply. Equilibrium will prevail. We postulate that turbulence, and especially heightened turbulence with its consequent chaos, risk, and uncertainty, is now the normal condition of industries, markets, and companies. Turbulence is the new normality, punctuated by periodic and intermittent spurts of prosperity and downturn, including extended downturns amounting to recession or even depression. And turbulence has two major effects. One is vulnerability, against which companies need defensive armor. The other is opportunity, which needs to be exploited. Bad times are bad for many and good for some. Opportunity occurs when a strong company can take away a competitor's business or even acquire a weakened competitor at a bargain price. Opportunity is present when your company doesn't cut critical costs.